Hi, this is Jim. I hope you're having a great day. We're going to take a look at a few ideas for trading my premium newsletters. Okay, now for commodity traders, the biggest thing is if you don't have a big enough account size, and like if I put out a cotton trade or a trade with a big contract, just don't take that trade because that's the biggest thing that's going to get people into trouble. Um, so we went short cotton right in here and we got stopped out here. So that was a great trade, but then look how it shot up. So we made on this trade probably, I don't know what it was, 1,500 bucks or something. But it just, you can see that this is volatile, and if you don't have a big enough account size, just don't take that cotton trade. Now here's the nice thing about my newsletters is I'm only charging $99 a year, so it's not like you gotta be forced into feeling like you gotta trade. I mean, some newsletters they charge $150 a month, $200 a month, so you feel like you got to be trading just to pay for the newsletter. Mine, you can just sit back and just wait for the trade. Now, on gold, this would be a great trade for lower account traders. There's even a micro gold contract that's $10 an ounce right now. So if we had like a $50 stop on gold, which that's a big stop, but the thing is gold is volatile right now. You need a bigger stop. That would be $500 risk, and we might even have like a $40 or $30 stop. That'd be $300 or $400 risk, and that is something that if you're going to trade commodities, that's about the type of risk you need. Now here's the other thing you need to do. So basically, to come back to that point real quick, is if you have a smaller account, just pick out like micro gold and only trade that, or mini corn or mini soybeans, and just ignore all the bigger contracts, cocoa, anything like that. Just that is only for bigger account sizes. Um, and here's the other thing about how to trade my newsletter is pick a market like gold and then stick with the trades. Because what I do is I got a stop and reverse system. And the reason I do that is because you never know when the big trade is going to happen. So like gold, we went short right in here and it moved our way. And in hindsight, I should have taken profit down here, but I didn't because I thought gold could keep going, and I'm trying to get the big trade. So we moved our stop to break even, and we got stopped out. Um, Now gold is about ready to put in another buy signal, so we'll be going long gold. So this trade didn't hurt us at all. We got short, got stopped out at break even, and now we're going to be going long. And this could be a monster trade. This thing could take off. And this is, again, this is about as low risk as you can get for commodities. If you can't handle the to $500 loss in gold, or on the bigger contracts, 1,000 to like $1,500. I mean, cotton, it's going to be $1,000 to $1,500. That's just the way it is now because the contracts have gotten to be so expensive. Back in the old days, you could trade corn or something for. You could even trade gold back in the old days for a $10 stop. Because the price wasn't so high, but you can't trade gold with a $10 stop anymore. So they're a little more expensive to trade. So what I recommend is if you can't afford these trades, then go to forex or my stock newsletter, because those trades, mini lot forex is really low risk, and my stock trades, most of those are pretty low risk, $200 or $300 a trade. And then I do trade ETFs in the stock newsletter, which means you can buy the amount of shares you want. So like we can trade crude oil or gold and buy shares, the ETFs, and then you can trade however many shares you want to buy, so you can keep your risk at however much you want it. But anyway, so back to this trend following system. Pick a market and follow all the trades in that market. That's the biggest thing I can tell you, because then if you're only following gold and you keep taking the trades, eventually we're going to hit a big one. And that's the one that will make your profit. And that's kind of the way commodities work sometimes. And then if you got enough money, obviously in your account, to trade a couple, like maybe gold and mini soybeans, then trade two, but follow those markets, and don't try to pick one trade in cocoa, one trade in sugar, one trade in gold, because what'll inevitably happen is you'll you'll pick out the loser in each market. That's just the law of trading. That's nothing you're doing wrong. That's just the way it works in trading. So if you stick with all the gold trades, and again for $99 a year, you can sit out and wait for the trade, because you only have to make one good trade to pay for the newsletter. Okay, so that's gold. That's the reason I wanted to bring up gold, is because I want to let you know that that's one of the best contracts to trade for lower risk traders or small account traders. And okay, beans. Here's a good example of my stop and reverse system. what happened in beans here. Um, okay, we were short mini beans. I went short like right in here. Well, yeah, right in here. We went short because I thought it was going to maybe break this low and head lower. Okay, it didn't do it. It came up here, and then I think, let's see, where did we go long? I think we stayed short. Yeah, we stayed short through this, and then because I had my stop up above this pivot high, and then right in here I could see that beans were making a turn, and we went long right here. So that was a loss. But now look at, we're in a big uptrend, and we're long from here to here. So we're actually, gonna make a, if you take the last two trades and total them up, we'll be at a profit. And we're holding long and hoping for more upside. So that's the way, that's the reason this stop and reverse works. Um, okay, so that's commodities. Try to only trade the lower risk contracts in commodities, even if I put out the higher risk trades. Um, Unless you have an account size that can handle that. That is just the most important thing I can say. You want to be able to make it to where if you make a trade and you take a loss, it doesn't bother you. If it bothers you, then you need to find a different market, and that's why I'm covering stocks, forex, and futures. So if there's nothing wrong with being a futures trader and just saying I don't have a big enough account size to trade futures and just trade stocks until you get a big enough account size to trade futures. Now here's a forex example. This is a mini lot. I recommend mini lots in my newsletter. Again, if you want to trade the bigger size contracts, there's you're more than welcome to do that. But I recommend mini lots because I like to keep the risk low for everybody. Okay, we went long over here on this GBP AUD, and look at this. This has been a monster trade. This will be probably $1,000 or more profit just on a mini contract. Okay, so there's going to be some $100, some $200 losses, but if you can hit the big ones like this, you're going to come out ahead. So this is a trade I recommended in real time. I said to get long back here, and I have held all the way up. Right now our stop is in here somewhere. It's under these few bars, and today's a monster update. This is going to be a monster trade for us, and that's what I'm trying to get. My trend following system is not only stop and reverse, but I try to go for the big trades. So sometimes we're going to be a little ahead on a trade, and then we'll end up getting a loser, and you'll think, oh gosh, we should have got the profit on that trade. But the thing is, in the long run, I think you want to go for the big trades, and then you'll come out ahead. Now here's another example of stop and reverse. And I think we were either long over here to start with, or we were long a different pair. I can't remember, but we did make money on this swing up. I can't remember if it was with the EUR USD or with a different pair. But then when we went short the EUR USD right in here, then it came down, and of course I thought the trade was going to work out, and of course it turned around and it started going up here, and I got out here somewhere. So we went short here, got out right in here, and so it was pretty much a break-even trade. We might have lost $100. I can't remember the exact number right now, but now probably in the night's newsletter I'll put out a trade to go long, and then it looks like it's going to go long, and this could be a huge upside winner for us. So again, we got to be able to, we get in the trade. If it don't move our way, I get out as quick as I can, and then we reverse and we try to get on the right side of the market. Now if we get it long and then this thing turns around, then we'll go short again. Sometimes you got to hit them 2 or 3 times. That's not unusual in trading. Okay, here's an example. So that's forex. And forex, if you have a small account, I would really recommend forex. This forex is a gold mine because these mini lots, you can trade them without much risk, and this forex market seems to really trend good. So when we do hit one, it's a big winner, and then when I get in one and it doesn't move our way, man, I get out as quick as I can. Okay, here's a good example of stock newsletter. GLD, this is the gold ETF. Again, I said gold looks like it's getting ready to put in a buy signal, and you can kind of see that on this chart of GLD. Actually, probably what I'll do in the premium stock newsletter is I'll trade SLV. So we'll be going long like SLV. Okay, here's how to do this. If this I don't have a buy signal yet, but if I do get a buy signal, it'll have to trade up into here a little bit. I wait for it to make the turn. I have a system basically, and this is not a buy signal yet, but it looks like it's gonna put in a buy signal. If SLV trades up here and puts in a buy signal, then in the premium stock newsletter I might say, okay, buy 100 shares of SLV, and then we'll put a stop, a couple bucks down, two or three, so that'll be $200 or $300 risk. Okay, if that's too much risk for you, that's the nice thing about trading these ETFs in the stock newsletter, is if that's too much risk for you, then you can just trade 50 shares. I mean, just take it, and do what you think is right with it. When I say 100 shares in the stock newsletter, that's just a suggestion. You got to, and if 100 shares is just way too few for you, if you have a monster account and you want to trade 200 or 300 shares, go ahead. But I'm just recommending like 100 just to give you something to go by. So you can see that this could be a pretty low risk trade, because if I went long SLV up here at like say $23 a share and put a stop at like even say 20, which is way down here, and you only traded 50 shares, that would only be $150 risk. See, and that's the kind of risk that most people can handle. I mean, we're going to have to risk something to trade these markets. So um, you got to really be careful with the risk. In commodities, don't trade any contracts that are too big for your account size. Um, Follow the same market as much as possible. Again, like SLV, if we were to go long here, and if it were to turn around and put in a sell signal, we'd go short, and we just follow it until we hit the big trade. So try to follow one market, and same thing for the forex. And stocks and forex are going to be the lower risk markets. Commodities are going to be a little higher risk. If you want to trade commodities, but you want to trade the lowest risk commodity, stick with micro gold or like the mini um, grains, or that's pretty much about the lowest risk ones in commodities. There are cocoa I seem to do well with, but that's still going to be. We've had some really great trades in cocoa, and some of the other markets are pretty good, but the thing is you're still going to have to risk 1,000 to 1,500 to trade those markets. We're long lean hogs right now. That trade's going really good for us. Well, so far. I mean, we're not really at we're at break even, and I'll probably bring my stop up a little bit to where we're a little profit tonight. But that trade's moving our way, and again, that's not a bad market to trade, but it's a little riskier. So anyway, end of speech. If you're interested in my premium newsletter, or if you sign up for my mentoring, you get lifetime subscriptions to all the newsletters. That's a great deal, and I appreciate your business, and thanks for listening. Jim.